right back on they ass, yo. They done made me mad, I've been keeping calm, constantly keep making cash, yo. I've been getting bag after bag after bag, yo. Presidential shit, I rap my Maybach mad black, yo.
What's up YouTube, this is Marty V and I'm back with another video. In today's video, I'm gonna go over how I scalp price as it's correcting after an impulsive move. Let's go. All right, we're on the charts looking at AU, and for these moves that I look for, as far as waiting for price to correct itself, I use the 200 EMA as my higher time frame confluence. You know, as my trend. I just follow the trend. So, seeing that I scalp on a 5 minute, we're going to see how this play out. So I can show you. So, price shooting up. So right here, I'm looking for a demand. And with this particular pair, it moves in the Asian session where we're at 2200, 2115. So we're gonna see how this plays out. So price taps in. So price tapping in, and as it takes this demand, I can take a 1-to-1. You know, it's breaking structure right here if it shoots up, or I can see what's to the left if I want to go for more than a 1-to-1. So scroll left, and there's what could be a potential supply or liquidity right here, or supply right here. So see what that's at, 0.66703. So let's see, wait for price. And I usually set my stop loss at half just so I can cut early. So I'm over here, I'm gonna use this as my TP target. Like I said in other videos, my goal is to take profit right where a demand or supply area would, you know, begin. So let's see what happens. Profit, boom. So that's TP. So that'd been a nice chunk of money right there. And let's just see what happens after this. Now we just let it play. If you notice, price is just going straight up in the 200 EMA, so it's leaving all of this space. So just these gaps right here that need to be corrected eventually, which will happen soon or the next day or, you know, hours after. So let's just see. So this is consolidating. This is consolidating. Price is high. Price is high right now, so I'll be getting ready to look for a sale. So I'll just be looking for the right entry to take this back down. I'm just waiting for this to go back down. Continuing to push up. That would be a good supply. Give them something more. See all the space continuing to spread between the 200 and price. All right, so price is high, so it's starting to drop. Supply. Sometimes I'll just set supply and demand zones everywhere. It's like traps, like I'm fishing. And let price decide which one it wants to take. So. All right, tap right here. All right. So that would be an aggressive entry, but it's already breaking down to the downside. So. Aggressive right there. You can tell price. You can just tell price is about to drop. So I would set my take profit right here, lined up with the beginning of this bearish candle, which pretty much would trigger a demand zone. Yeah, it would trigger a demand zone, and we don't want none of that. We don't want no drawdown. We want minimum drawdown. So again, this is a counter trend move, so I would be risking low. So let's see what happens. Starting to fall. Back up. Boom. All right. Start to gain some ground. Boom. Take profit. So like I said, this was an impulsive move, you know, based on possibly news at the time. It was an Asian session. So price shot up, kept going up till it was high, and then it started to drop. So when it dropped, it gave me a supply entry, an aggressive entry at that, and you just went on down, minimum pullbacks, all the way to my take profit. Clockwork. And I use this all the time. You'll see these opportunities day in and day out, no matter the pair, because like I said, it's reacting off of news or possibly, you know, a stock exchange open. And that's the thing, as it pushed down, it gave seller several opportunities to get in. Yeah, supply, I'm gonna draw them right quick. So despite the wicks, this is still a supply zone. So buyers could have got in, sellers could have got in right here, scalp that, price pull back up. Let's see, right here, I gave more sellers an opportunity to get in. So you could have scalped that, and then even right here, gave sellers even more chance to get in on that last of this leg, this move right here. Boom, several opportunities. That's why I love looking for these moves. And again, it doesn't matter, even if it crosses over the 200 EMA. It could signal, you know, a trend reversal, but the main thing, the main objective of this is to balance out these gaps that were made from these impulsive candles over here. So it shot up like a Ferris wheel. Not a Ferris wheel, but a roller coaster. Gets to the top, I gotta bounce this shit. I gotta go all the way back down. It just works its way down. Sometimes it's clean, sometimes it may drop, you know, depending on the banks, if they're really on the move in the market. Other times it'll just work its way down, you know, creating more lower highs and lower lows until it balances this out. Now you got a demand. So just for fun, let's see what this demand does, because you know, it goes in the way I trade. You know, I don't trust no candlestick. You know, when I talk about opposing zones, I don't trust none of them. You think you might have it made, and then turn around, you think it's gonna blast through this area that's not a potential zone, and end up cooking you back in the drawdown big time. So I'm just curious to see what this demand does. Shot up, boom. Ought to have been a drawdown. We made another supply right here, but let's just see if it breaks that. Went back down, so anybody taking this supply, they could have scalped that. Either way, if you were trying to hold the supply right here, you went back up. If you would have held it, you went back down, gave you a second chance. I would have got out right here, like I said, because of that demand, and it's right at the edge of the 200 EMA, you know, the trend, you know, that uptrend. So I don't want to play around with that unless other confluences are telling me that it's going to be a reversal, then to hang on. But other than that, my whole goal was to scalp this to there. So, alright, let's take a look at AU during the New York morning session. And I'm going to pick this one out to show you guys an example of, price as it moves away from the 200 EMA, especially when the stock exchange opens. So, let's see, price is dropping, see it, banks in the market. So I guess pull back, but no, yeah, see it's creating all this space between that and the 200. So it has to recover, it has to fill that in. It's not going to leave all those imbalances open. It has to correct. This is an impulsive move, impulsive leg. You got to have the correct leg, the corrective leg to come after. So its price is pretty much in consolidation right here. So let's see. I'm going to use these two candles right here. I tend to use two candles if need be in areas like this where I'm waiting on price to break out and begin its correction. So price is tapped, and let's just see what happens. Get in. The only reason I'm setting this up now because price is in consolidation, so my target will be right here, just right along the 200 EMA, because I feel like once it balances back, as long as price is still bearish, it'll continue making, clean lower highs and lower lows. So let's see. All right, we're starting to push up. Somewhat back down. Feel some of that gap right here also. Let's see. Like price is somewhat exhausting, making small candles right now, but still you're in profit. The trade is going in my favor. Not as fast as I like, but it's still pushing up. Still going up. Look at that. And there we are. I mean, like I said, I would have got out right here because this would have been a supply zone. But it kept pushing up and disrespected that supply, kept pushing up and created a breaker block right here. And it ended up pushing up to this supply. So it tapped this supply area. So if I'd have held that, man, that'd have been a good reward. Give me a 6R. So just trying to give you guys an idea of what I look for when I'm in the market, besides supply and demand. But yeah, this is what I'm talking about. Another example of price dropping at a momentum, impulsive candles dropping, and then it ended up creating an entry right here. This was a demand, and just gradually push back up and hit TP. So I hope this helped you guys. When there are not no clean supply and demand setups open, or price is pushed up so much that it has to correct itself. I'm just giving you guys options that there are entries when price is after it's made impulsive moves or big rejection wicks that really will throw all your your game out of balance when you're in the market looking for clean setup, but you can't because news has screwed things up, or the stock exchange opening. So that's all I got for now, guys. I hope it helps out, and I'll be back next time. Smarty V, and I'm out.